Hello and welcome to Flagstaff TV. Today we are joined by David Mirzai, who is an energy analyst at SP Angel. David, thank you so much for joining us today.
Good morning, Catherine. How are you?
Very well, thank you. David, following on from Sound Energy's results last month, how have things changed for investors?
I think the key announcement that they had last month was the agreement with the Moroccan tax authorities. Sound announced that they had agreed to a $2.5 million tax bill. That removes an unhelpful kind of overhang on the stock. It frees up a lot of management time, and it also allows them to push forward with the Greater Tendrara development.
And what stage is the Tendrara gas development currently at?
Well, we heard from the company last month that the first phase, which is the development of a micro LNG project, they've currently installed the foundations, and the constructors will now be moving on to fitting out the actual facility itself and also the storage tank. They're still hoping to have that ready for Q1 24, ready to start kind of first gas or first LNG cells in the first half of next year. The larger phase 2 development is at the funding stage at the moment. We're hoping possibly in the next few months to get confirmation over the bank lending, a potential partner coming in, and also hopefully for Sound itself to push the button on that development in the second half of this year.
And has the upheaval in European gas prices affected Moroccan gas prices?
Somewhat, yes. So the first phase of the Sound development, that has a pricing range with Afrique gas. And the way that European gases are at the moment, you would have found that the ceiling price has probably been approached in that agreement. So we would probably expect Sound to get some in the region of $8 an MCF for their gas, towards the top of that pricing range. For phase 2, Sound already have an agreement with the utilities, which again will probably be towards that $8 mark. But anything over and above that contracted amount that they can feed in either to the pipeline or to those power stations will probably reach a market price. And as we've seen in Europe, they've been pretty volatile of late.
David, what could this mean in terms of valuation?
Well, it's tough to say at this moment because obviously we're still some way off first gas. But certainly the first phase of the development, we expect to mean some in the region of about $10 million not free cash flow, pardon me, $10 million of cash flow net to Sound just from that phase 1 development. As you go into the phase 2 development, that kind of cash flow jumps up to about $60 million from phase 2 alone. So taken together in and around $70 million of cash flow, the way prices are at the moment. Now, for every $1 move in the gas price, we can probably expect to see maybe a $2.5 million per annum move in Sound's cash flow. So it's a pretty significant if we can see those prices that we saw last year.
Sound is currently looking to bring in an industry partner. What are your views on that?
Certainly an industry partner would be my preferred route. An industry partner brings a number of different attributes to a relationship. Number one, it obviously brings funding. It reduces the ability of Sound or the requirement for Sound to go out and get the necessary equity funding that it will need on top of the project lending that it will receive. The second thing that a project partner will bring is hopefully industry validation, both to the project and to the resource base. And that's very important to investors to see that someone else sees value in the same thing as your management team does. I suppose the third thing it does, it also just brings some risk mitigation. So Sound at the moment has a 75% working interest in that project. If you can bring that down to 50% or even 35 or 40%, that kind of shares the risk with a larger partner and reduces your capital exposure.
Now, is vendor financing a good fallback if Sound want to go alone at 75% equity?
Well, the beauty of vendor financing is it removes the need to put your own equity up front to pay for items that you need in your project. You can use the vendor who's more than happy to effectively bankroll your development on their own balance sheet, and then take payment for it when you start revenues up. The problem with that, and that's worked very successfully in phase one. The issue with that is that for a much larger project that Tendrawa project phase two is, we would also like to see an industry partner, albeit with or without the vendor financing.
David, once the infrastructure is in place, do you see any exploration discovery as a no-brainer for development?
Certainly. I mean, that's been largely the problem with sound energy's resource base today, is people will talk to how these exploration discoveries were made back in 2015 and 2016, and it's taken so long to get that gas monetized. Well, that's because there was no infrastructure around the region. This isn't the onshore US where you can just tie it into a nearby pipeline, which is going through your neighbor's estate. You need large pieces of equipment to safely control, bring out this resource and then monetize them. In the first phase, that will be a micro LNG facility, which is being installed and operated by Ital Fluid. And in the second phase, that'll be a 200-kilometer pipeline, which will tie into an international pipeline and allow them to monetize that resource via public utilities, or even further afield into Spain.
And finally for today, what do you think that the market is missing on sound energy?
I think that the key difference of where sound energy is at the moment to where the market may believe it is the market still sees it as a development story, whereas for us, it's only 12 months away from first cash flows. And once those first cash flows comes in, the project is very much de-risked, and it can use those cash flows either to go out and get refinancing, or use the cash flows themselves to finance new parts of the development. Certainly, I think getting the second part of the project, phase two, the pipeline-led development, into operation, into development would help. And yeah, over the next 6 months, we're hoping to see first bank financing, probably in the next couple of months, and then a partner, and then lastly, FID being taken on that project. And all taken all together, in the next 12 months, we expect a very active period, and we're expecting to see that de-risk the portfolio significantly.
David, thank you so much for your time today.
It's been my pleasure. Goodbye, Catherine.
Goodbye, David. And thank you for watching Flagstaff TV.